It's the Real Estate Podcast, brought to you by ANZ Home Loans for financial well-beings.
And it's the Real Estate Breakfast, your weekly pulse on Australia's property market, where numbers meet what's actually happening on the ground. And remember, we are independent and not tied to any real estate agency or developer, which is pretty important. Straight insights and the facts behind the property headlines. We've got a few of those coming up this morning. It is a Thursday, into April the 2nd. Happy birthday to you if you are celebrating a birthday. Couple of actors. Pedro Pascal is turning 51. Michael Fassbender, he's only 49, and it was on this day back in 1968. If you saw the movie, you'll know what I'm about to talk about. Space Odyssey premieres globally. The Stanley Kubrick film, how the computer taking control of the spacecraft and the ability to read lips when the astronauts thought that they were in a safe place. Yeah, once again, the movie becoming a reality. Hey, good morning if you are on the Sunshine Coast, and especially in Caloundra, because we're just going to have a quick look at the median price, where a house median price is around that $870,000 mark. Days on market there, 34 days. Units, the median price, 675. Well, it kind of ranges between a one-bedroom at that price, and it goes right up to 1.4 million for units in Caloundra. Boy, has that area expanded or what? Let's right now go to Melbourne and catch up with Trent Wiltshire. He is the Manager of Research from RLB. And a very good morning to you, Trent. Welcome along to the Real Estate Breakfast. Nice to have you on this morning. And you were telling me that you are a AFL follower of North Melbourne, off to a bit of a decent start this season.
Good morning, Craig, and thanks for having me on. Yeah, so I'm a Roos fan, long-suffering Roos fan, but there's some positive signs this year. Been to 2 wins out of 3 games, so not a bad start.
Yes, well, Meatloaf did have that song, 2 out of 3 ain't bad. So, yep, nice start for North Melbourne in the AFL. Now, you guys have got a report out with regard to the Iran conflict, have you?
We do. So the RLB is a large quantity surveying firm. So looking at construction costs, that's the core of our business. So we put out a piece of work just trying to assess what the Middle East conflict means for construction costs as a whole. So it's a hard thing to do given that the situation's changing quite a lot, but we've tried to just give some insights into where we think things stand now and where it could end up if the best case scenario, the war ends quite quickly, or potentially, a worst case scenario if it drags on for a while, what that will mean for construction costs.
All right, so this is more of the commercial look right now. So as you say, the material cost, how concerned should some of these developers be right now, since we are, as I say, around a month into this conflict?
We've certainly seen cost pressures start to flow through into the sector already. And, it happened pretty quickly, particularly in that logistics freight part where lots of companies passed on fuel surcharges straight away. So in the range of 10 to 25%. So that's delivery costs from hardwares or construction material suppliers being added surcharges too. We've seen costs rise, obviously, for diesel. Diesel prices have shot up over 75%, and that's flowing into equipment that's used on particularly big projects, but also small projects as well. So that's the immediate impact. And then starting to see this flow into actual costs of materials. So particularly those that are linked to oil. So things like bitumen and asphalt, but also concrete, steel, plastic pipes is another one we've seen big price rises. So it's really starting to flow through to quite a few products in the construction sector, which will push up prices.
Have you guys done some sort of modelling in terms of the Iran war continuing and what that'll do to these construction costs moving forward?
We've done a couple of scenarios, but it's really, given how much this has been changing recently, we've sort of done a worst case scenario. If this drags out for a long time, obviously a terrible human tragedy as well, but will clearly have a big impact on prices for a while. So we might see costs shift up, and that will mean costs flow through to higher prices quite significantly and maybe don't step down. And that may actually end up flowing through into high interest rates as well. So really a double whammy. We haven't put a number on it yet, just given the uncertainty around it.
That is talking all about the big commercial construction costs. Let's drill down into some of the numbers, if you've got them at the ready, as far as residential building costs.
So for residential, it's still affected. Like the biggest immediate impact has been through those fuel prices. So diesel running costs for the big equipment on the big projects has been an immediate impact. Bitumen and asphalt as well. So for road projects, and there's for some resi as well. But we are seeing things flow into residential. So you could think about those transport and freight costs for every delivery that goes to a construction site in the suburbs, building a home or a townhouse complex, polymer-based products, plastic piping that used for plumbing, those types of things, that's up about 30%. Steel up 5 to 10%. Some aluminium cladding and facade products up by about 10%. So it's not everything, but it's becoming a broader set of inputs, and that will flow through, unfortunately, to prices for new homes.
And we are talking to Trent this morning in Melbourne. When we come back, we'll talk about the dreaded rate rise and what is likely to happen to that, and an index that is very interesting. This is the Crane Index for looking at just how much activity is happening around the country. So we'll dive into that next.
Eager to expand your property expertise? Enhance your real estate know-how with us.
And right now it is time for another property tip. We are going back into Canberra to the ACT and to Mario San Francesco. And you've got a property tip for us this morning, Mario.
Craig, good morning. Thanks for having me on. I absolutely do. And this is for listeners looking to buy luxury property in tightly held markets. And my tip for those buyers would be, number one, seek out a specialist agent that has worked in that area for a long time, because a lot of these properties are transacted through relationships, and also because they're typically what I call generational properties. They're held for 3 and 4 and 5 decades. They don't transact often. It can take 2, 3, 4 years to get your foot on the right property. I would build a relationship, have an open discussion with an expert in that field.
And do you have like the situation where somebody like a property buyer might come in from outside of the area? And we've talked about this happening where sometimes that sort of dynamic doesn't quite work so well. Have you been infused with that?
I agree with that totally. I think it's like me saying, hey, this property looks good in the eastern suburbs, and I wouldn't know one street from the other. It's taken me 30 years to understand the pluses and minuses and the idiosyncrasies of these high-end properties. And that's not something that a buyer agent can, discover in an area that they're not familiar with. So look, buyer agent, real estate agent, whatever, you need to have the expert that has a depth of knowledge that's going to point you in the right direction.
Decode the property market with insider knowledge and insights to better navigate your real estate journey.
We are talking with Jessie, and Jessie's there in Ipswich, there in Queensland. I want to ask you about, people's buying habits, because sometimes people can be out. The last thing on their mind is buying a property. We've got these auctions that are taking place. There's sales offices with new product. You can be walking and just sort of minding your own business. Suddenly you get the idea, the notion that, hey, I'm going to start bidding on this property, or you sign up for something new.
Yeah, definitely. I think they're the best types of purchases personally, spontaneous ones. But it's not uncommon. Like we see it quite often where people will be driving around an area. They might have gone and looked at another home, or just discovering an area, doing a bit of research, getting a vibe for how it feels, and then wander through an open home that they might have been passing by, and next minute they're filling out an offer form and purchasing it. When they're putting up a sold sticker, they're kind of like, what just happened? That happened quick. But they're usually the happiest buyers, I find.
Let's explore together the power of real estate.
It is a Real Estate Thursday, the second day of April. We are heading into another weekend, a long weekend coming up. Looking forward to that. Trent is with me, taking a look at the construction industry, and we should just stop down and have a look at what is likely to happen with regard to the interest rates. Now, the RBA is watching all of this conflict in the Middle East nervously, understandably, because of the interest rates. There is only one way that is unfortunately likely to head in the next few months.
Yeah, it certainly looks that way. So the Middle East conflict has added upside risk to where interest rates are going, but they were already heading up anyway. So it was expected that rates were probably heading to 4.35% around the middle of the year. So that was one more rate rise, but the markets now expect another 3 rate rises, so up to about 4.85% by the end of the year, and in part due to the Iran conflict. And that's because the Reserve Bank is worried that with inflation rising even further, people's inflation expectations are going to start to rise too. And that's when the Reserve Bank gets really worried. So that's why we're probably going to see a few more rate rises up to 4.85% by the end of the year.
It's interesting because there's a lot of talk about the construction industry slowing down, but the reality seems to be quite different. Across Australia, we're seeing very high levels of activity with more than 800 cranes operating nationwide. I always find this quite interesting because it's a great index. The more cranes that are out there and operating, the busier the country is.
Yeah, so RLB does a crane count twice a year in Q1 and Q3, and we just completed the one recently. So we found there was 838 cranes around Australia, down a touch from last year where there was 845 cranes, but still a very high level. And that sort of aligns with the ABS data, which showed there was a record amount of construction work happening in Australia in 2025. The sector is strong. One probably thing to note is that the residential sector is probably a touch softer than what it had been. So crane numbers in the residential sector dropped a bit. But if you look at things like building approvals, it suggests that the actual resi sector might start to pick up again soon, noting that the Iran conflict has thrown a spanner in the works for a lot of things and might make some projects not feasible. But that's what the numbers from the crane count.
Yeah, and if you take Melbourne as an example, residential projects used to dominate, but now they make up a smaller share as major infrastructure projects are ramping up, as you are talking about. And Sydney still leads the country when it comes to construction activity. It holds a significant share of all cranes nationwide, well ahead of other cities. All right, Trent, well, good to catch up and talk about some of those construction costs around the country. It is a good point to make, as we will definitely see that rising just as a result of what is happening in the Middle East. Great to have you on the Real Estate Breakfast. Enjoy your day and enjoy the upcoming long weekend.
Thanks, Craig.
It's the Real Estate Podcast, talking properties from 6 a.m. every day from every corner of the Australian real estate market.
Going into these war-torn countries years ago, which was, let's face it, extremely dangerous work, and then suddenly in the UAE, bombs are dropping from Iran.
You know, Craig, it's a biggest surprise to me that I would have thought that being a war correspondent and being a real estate broker in Dubai, suddenly those talents would somehow, run in parallel and complement one another, because, I actually had missiles and drones exploding overhead when I was in Dubai, and I thought I got away from all this.
Everybody that knows you has probably been calling you for a reaction.
Yeah, my mother first, telling me to get out of there. But actually, I think Dubai, like many people, has been very safe in the sense that they've been able to intercept, 90, 95%. Even one is enough to disrupt the market, cause anxiety, and it's something that cannot go on.
We connect you to the best real estate information across Australia. The Real Estate Podcast.